Hello everyone, this is Brother Lito, teaching accounting at Church College Viola, and I am going to teach you about cash receipts journal. First, we are going to look at what a cash receipts journal is, and second, how it is prepared. First question, what is a cash receipts journal? To be able to define cash receipts journal, we should understand what the term journal really means. Lalo na may itaw journal. According to the Year 10 Business Study Textbook 2, a journal is a book or file that is used by an accountant to record the transactions of a business. Alona winga, o the journal, o se tusi po se talafa mau o the business yan nga winga fai yaso taitas. So now we can describe the term cash receipts journal. A cash receipts journal is a record of all money received by the business. Or the cash receipts journal o se whaamaumongo tupe mau pisinisi yasu taitas. For instance, cash sales or sale of an asset. Source documents mostly used to prepare a cash receipts journal include copy of receipts and bank statement. Let's take a look at this receipt. This receipt was a proof of sale made on the 22nd of February 2006. This receipt proves that the business received cash for the sale of an electric jug on the given date. The question is, who is the business here? The answer is Appiah Traders. In other words, Appiah Traders is the individual or business who issued the receipt or who receives the cash in this case. And who is the customer? The customer is usually found in the details section of the receipt after the phrase received from. According to the receipts, the person whom Appiah Traders received cash from is a lessor. Here is an example of a bank statement. To keep it short, this statement gives full details as to where business cash was received from, as well as where money was spent on. On that note, the deposit section of the bank statement shows where money was received from and how much. So let's take a look at this transaction or event. The transaction reads, on the 1st of January 2005, the business sold goods to Elena for $500 cash. This means that the business made a cash sale of $500 and therefore cash is received. This cash is then recorded in the cash receipts journal. The table under the transaction here is how a cash receipt journal looks like. Given are columns for dates, particulars, receipt, bank, sales, and sundry. These are not the only columns for a cash receipts journal. There could be more, depending on the number of times an event happens or takes place in the business. For an example, if during the month of January the business recognized that they received cash from interest many times during the month, then there should be a column for interest, like this cash receipts journal. Anyhow, back to our transaction. Note that this transaction took place on the 1st of January 2005. Therefore, the dates to be recorded in the date column should be 1st January 2005. In the particulars column, here you record the item where the business received cash from. In this case, it would be sales or cash sales. The business received cash from selling goods to a customer, Elena. The receipts column keeps records of 2 or more transactions happening in the same date. Otherwise, if a business only made one receipt throughout the day, then the amount goes under the bank column. For instance, because there was only one transaction taking place on the 1st of January, then the amount received from Elena, which is $500, should be recorded under the bank column, not under the receipts column. Next, the same amount should also be recorded under the sales column, which again tells where cash was received from. Now let's look at this next example. This one says that on the 3rd of January, the business received interest of 15 tala. Again, the dates should say 3rd of January 2005. The particular should be interest, which is what the cash was received for. Let's say there were 2 transactions happening on the same date. In that case, the amount for interest will be recorded under the receipt column and the sundry column. The sundry column is used for recording items that took place once throughout the month. Again, If an item occurred more than once, then there should be a specific column for that particular. Because interest only happened once, therefore the amount for interest should be recorded under the sundry column. This next transaction took place on the same date. Here, Sione, a client, paid his account, or in other words, Sione paid the amount he owes the business, which is 300 tala. Again, the dates should be recorded under the date column, that is the 3rd of January 2005. The particular should be Sione, which is the name of the person whom the business received cash from. The 300 tala should be recorded under the receipt column together with the 15 tala amount for interest, given that this transaction occurred on the same date. Then, 300 tala under the sundry column, as this is the only transaction about a client paying off his debts. The last part is totaling the receipt column and then writes the balance under the bank column, like this. This indicates that during the 3rd of January, the business received a total amount of 315 from their different activities. The final step in preparing a cash receipts journal is writing the totals for the bank column and the rest of the columns on the right side of the bank column. In this example, the bank column adds up to 815 tala, the total for the sales column is 500 tala, and the sundry column amounts to 315 tala. To check if your cash receipts journal is balanced, the bank column should have the same total as the total for all the columns on the right side of the bank column. In this case, sales and sundry. Adding the sales and sundry columns together gives 815, which is exactly the same balance for bank. Thank you all for watching. I hope this short clip helped you answer the 2 questions from the beginning of this video. First, what is a cash receipts journal? Second, how is a cash receipts journal prepared? Of Tailabo.